Hi, it's CryptoMaggie from Traderbox here, and in this video, together, we will find out what trailing stop loss and trailing take profit actually means, and how these orders work. So let's start. To begin with, we need to place orders. First of all, select the Portfolio View tab and place orders by clicking on Expose button. Move the slider to Trailing. A trailing stop-loss order is a type of trade order where the stop-loss price is not set as a single absolute dollar amount, but instead as a certain percentage or a certain dollar amount below the market price. As a result, the stop-loss price moves with the price of the underlying cryptocurrency. When the price goes up, it drags the trailing stop-loss along with it. But when the price stops going up, the stop-loss price remains at the level it was dragged to. When the price goes down, the stop-loss is triggered. The percentage for the stop-loss can be set in the corridor size field. In our example, I will set the corridor value to 0.7%. As soon as the difference between the current price and stop-loss price exceeds 0.7%, the stop-loss automatically starts moving up towards the price. We have entered corridor parameter of 0.7%, which means 0.7% trailing stop-loss. Notice that the stop-loss line is below the price of the underlying transaction entry price, and the distance between stop-loss line and our transaction is 0.7%. We were correct, and the price of the underlying coin goes up, dragging the stop-loss price with it. When the price of the underlying coin goes sideways, the trailing stop-loss is stable. Stop-loss price never goes below its own previous high. It fixes the highest previous level. When the price of the underlying coin drops sharply and breaks through the last stop-loss level, it crosses the stop-loss line on the way down. The stop-loss order execution is triggered. This will allow us to fix our profits. Now, let's talk about trailing take profit order. What is it? Trailing take profit works almost the same way as trailing stop loss. Trailing take profit is a stop that adjusts upward in the case of a long trade and follows the price. Its only purpose is to maximize your profit. It is a safe way to secure profits without having to constantly monitor the chart and adjust your price target levels when the token fluctuates. Think about it as a take profit with a trailing stop loss. How does it work? The easiest way to show how it works is to use an example. So let's go to the Portfolio View tab, place an order by clicking on Expose button, and move the slider to Trailing. We need to insert two parameters for the trailing take profit order, the take profit level and a corridor parameter. Let's set the take profit level at 5% and the corridor parameter, let's say, at 0.7%. Please take a look at the chart. As you can see on the chart, the asset price moves sideways for a relatively long period of time, consolidating and trading within a corridor. Initially, we wanted to take profit after the asset price appreciates by 5%. When this happens, your usual take profit order would be triggered. With the trailing take profit order, if the price continues to rise, you will not be stopped at the upper band, and your trade will only close when the price starts falling. The trailing order gets activated at the upper band of the corridor, and the trailing take profit line starts moving upwards with the price of the asset lagging by 0.7%. It's the same way as it is in the trailing stop loss. As with the trailing stop loss, the trailing take profit never goes below its previous high, and if the price of the asset dives below that level, the take profit order is executed. You may ask yourself, what should I use, trailing stop loss or trailing take profit? The answer is, although they look alike, they are used for different markets. Trailing stop loss is used for trend market and trailing take profit for consolidating market. We also don't recommend to use two of them together at the same time. Once again, these are two different orders working in two completely different types of trading. Let's summarize. First, trailing stop loss should be used when we observe a well-defined trend in the asset price. Trailing take profit should be used in a consolidating or indecisive market. We do not recommend combining trailing take profit and trailing stop loss at the same time. Traderbox recommends to place an ordinary stop loss with a trailing take profit and an ordinary take profit with a trailing stop loss. Thank you for your attention. It's CryptoMaggie here. Bye bye!